Yo, what is good, YouTube? We are back with another video. If you guys are not in the free Discord, go join it. It is the first link down below. This should be a pretty quick and simple video. This is just going to be covering when to use CISD with a series of candles or just a singular up or down close candle. Right, so if you don't know what the CISD or an order block is, go watch some of my other videos. Go watch it on YouTube. I have a bunch of videos of them, but we're not here to go over that. We're here to go over when to use properly the series versus just a single up or down close candle, right? So we got 5 examples here. We're going to go over 3 series versus 2 single up or down close candles, right? So this example here, we have old low taken, right? We have this down close candle over here, closed beneath all these lows, and the low was still not taken. Here at 6 a.m. it drives down into this low and takes this low, right? This is whenever I would use a series of down close candles. Why? It's because we do not have an SMT, right? So the SMT is going to give us a series or just a single. If it is not an SMT, we're going to use the series of down close or up close candles, right? So we come down here, we swipe this low, and we're going to head down to the 5-minute chart, right? So right here we take that low. Now the CISD would be the entire way up here. Same thing on the 15, it would be all the way up here, right? But we want to get in on the lower part of the move, so somewhere down here, even here, right? So what do we do, right? We have a swing low here. Okay, so we have this swing low right here. It's purged, closed back inside of here. So we're going to head down to the 1 minute, right? So 4-hour low purged, lower time frame swing low purged. Right here becomes your CISD, a closure above the opening price. And then we come down and we tap this wick, right? So we have a CISD here checked, right? Check off. Right? Then we have an inverse fair value gap right here. Okay, so if you didn't get in on this order block, right, because if you're going to wait for a deeper retracement that never came right here, that's fine, right? There's going to be an entry later on in the move, right? So what happens right here? We come into this fair value gap, this down close candle gets closed above right there. So right here can be your second entry inside of a fair value gap, down close candle, right there with a stop loss under this low, and you're targeting that high, right? So if you didn't get in here because you wanted a lower retracement that didn't come, right here can be your confirmation entry, right? And so on as right here, fair value gap, down close candles, right here. This down close candle keeps getting respected, and then we continue up to take out these highs, right? So that all formed from this series of down close candles. Okay, so on this one, what happens here, right? If we go to the higher time frame, we have a large 4-hour fair value gap, and this candle closed beneath all these lows, and the low still has not gotten taken, right? So we have an obvious draw on liquidity, which becomes this sell side. Okay, that 4-hour fair value gap can be measured down to this little 15-minute. We have a 15-minute swing high that gets purged right here. So comes up, purges that high, closure beneath this opening price, right? Taps it, keeps tapping it. Now, if you just wanted to target, let's say, all these equal lows, okay, so we have this sell side here, we can go down to the 5-minute chart. Okay, so right here we have a purge, fair value gap, obvious displacement on the lower time frame. Right here becomes your 5-minute change in the state of delivery. Okay, let's clean this up a little bit. Let's turn this indicator off. Right, these 3 up closes, gets closed below. We come up, tap into this. Right, so what happens here? Comes up, taps into this. This candle here even taps this lower one, right, the wick of it, I guess. And then we close beneath this candle, right? So we come up, we tap into this candle, and then we purge this sell side, right? So if you didn't get in on this order block, you could have got in on this order block. Risked off this candle's high, targeted this low, or just a strict 2R, right? Comes down, takes you out, and then it comes back up, right? So right there, order block, order block, and then after sell side's purged, you don't do anything until you see more, right? Then we come up, obviously, we tap that 15-minute CISD, and then we inverse the fair value gap. Comes down, and then, yeah, you guys get it. Oh, these drawings are from these two charts, right? Ooh, so this example, what do we have here? I don't know if this is a bullish or a bearish example, but we have a 4-hour fair value gap. Let's play this one more time. Okay, we have a 4-hour fair value gap. Right there, right? This got purged. We can go down to the 5-minute. Right, so this big red box is that 4-hour fair value gap. We have equal highs here. Okay, so we have equal highs, an obvious buy side level. Now, we do have a swing low right here on the 5-minute. Oops. Wonder if it's a swing low on the 15. It is not, but we can go down to the 1-minute after that low is purged right here. Right, that's that higher time frame swing low, that 4-hour low. Gets purged here, right? So what happens here? What becomes your CISD? Well, right here, we have a fair value gap. So if you're not confident in longs yet, wait to see if this gets respected. Your CISD happens here, right? Obviously, it comes deeper, imbalance. So you could just use this down close. Doesn't tap it though, right? Taps the wick, then it has an expansion higher. When will this not come any lower? Right here. This is going to support price. Why? Because it came down into a fair value gap. These down close candles, which happens to be the CISD, right? Swing low taken, respects this fair value gap, closes above this series of down closes. Once this gets inversed, and this fair value gap is formed through this order block, this is now going to be supporting price until we reach these equal highs. Right? Simple as that. Okay? So the next example is going to be your what? SMT and a singular down or up close candle. Alright? So if we head to the 4-hour, what happens here? Right? We take this low. Oops. Let me get rid of these two drawings. Right, we take this candle's low, close back inside of here. Whoa. Okay, there. Where's your SMT? It's right here, right? Forms an SMT right here. Right, so we have that bullish SMT right here. After tapping or taking that 4-hour swing low, which happens to be right here, expansion higher. Now we have an SMT at market open. So go down to your 1-minute chart. Right here, forms that SMT. Where's your CISD? This down close candle right here, right? This candle taps it, continues higher. This move right here comes into this inverse, continues higher the rest of the morning session pretty much, right? But this SMT, now yeah, we didn't have the series. I don't know if the next example does either, but if you're right, this SMT should have an expansion pretty quick, right? As you can see here, taps the CISD, comes into the inverse, respects the inverse. Now if you didn't get in there, you can use this series of down close candles then. All right, closes above the opening price. This now supports price, continues higher. Right, so this example here, SMT, right? You can see the same swing high over here on the ES, not taken. Right, so 15-minute SMT. Go down to the 1-minute chart. Right, so we form that SMT here. What do we see? Well, we do not close, right here's the SMT. We do not close beneath this low here. We come up again, purge this high. Oops. Purge this high. This will now become your order block or CISD, right? This up close candle, because we have that SMT there, swing high purged. This will now support price to go lower, right? Comes up, taps it. Now these down close candles or up close candles become order blocks. Comes in, this actually comes back up here and taps this. Then this becomes an order block, right? Comes up, taps it, and then continues lower, right? So we use the series of down or up close candles if a higher time frame PD array has been reached and there is no SMT. We use a singular up or down close candle if there is an SMT, right? And you obviously still want to see a higher time frame key level unless you have an established bias. But yeah, it's that simple, right? It didn't close beneath here, so there's no CISD. Comes up again, then we close beneath this candle, should support price to go lower. All right, so that's going to be the end of the video. Hope you enjoyed. Join the free Discord. I'm out. Peace.